Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical structure level. In fact, what we know is that this level was acting as previous monthly resistance starting from here, and all these rejections to the downside were created exactly away from this level. And now the market with this impulse has broken above the level. So all the previous resistance that we had here is now turned support, exactly the same level, because what we know is that in the market, previous resistance, once it gets broken to the upside, as I explained many times, becomes support. The market retested here, the previous monthly resistance turned support, and started rejecting it to the upside, which is in fact exactly what you would usually expect in a situation like this. Now, if we zoom in a bit more closely, we can also notice that in creating this impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, what we can see is that the precise area that the market tested and rejected is exactly that zone in between the 0.382 and 50% retracements here from a monthly standpoint. So actually, what we have inside of here is confluence of support, because we have the 0.32, 50% retracements, and also the previous historical resistance turn support that we have just identified, all lining up in the same area of price. And when you have a confluence of support area, you have increased probabilities of seeing institutional buying. And we will be speaking about institutional buying later on into the video when we move to the order flow analysis. But in fact, what happened is that we saw institutional longing inside of this area, and price exploded to the upside very aggressively, fueled by those longs. Now, let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, the situation is quite clear. We had an impulse to the upside, the market followed with a short correction, then we had the creation of this candle here. Now, when you see a candle like this, so a candle with a green body and a very long wick, usually you expect the next candle to fill in this wick. And I spoke about that in the previous analysis last week, and in fact, this week that just ended, the market moved to the upside very aggressively, filling in that wick, which again is exactly what you would usually expect in a situation like this. Dropping down on the daily time frame, what do we have? Now, from a daily standpoint, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Then the market found resistance at this zone. The market broke above it. And after the break on the retest when the market was here, I made another breakdown explaining all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market did. And it created a huge move to the upside. Then after this impulse, when the market was correcting here, I made another breakdown explaining all the reasons for which we could expect this rejection to the upside. And after this impulse and correction, when the market was here, I made yet another analysis explaining all the reasons for which we could expect this move higher. And again, that is exactly what the market is doing as we are speaking. And by the way, I will link in the description all those previous analysis, so you can go and check them out for more free education. Now, Before we dig deeper into what we have from a technical perspective here at the moment on gold, first, let's go and see what we have when it comes to the order flow by looking at the commitment of traders. So what hedge funds and the big players in the market are doing and how they're moving their orders. Now, if we check the data here for gold, we can see how with the last reports, net positions have been massively increasing. In fact, we went from having 131.1k net positions all the way up to having 199.2k net positions. So we had a massive increase of the net positioning, making gold stronger. And what we can notice is that, in fact, institutions are now sitting with 265,000 longs compared to only 66.3k shorts. So a massive amount of longs compared to quite a small amount of shorts from an institutional perspective on gold. And we can see that the increase in longs has come with the last few reports. We went from having 211k longs all the way up to 265k longs, and shorts actually got decreased from 86.3k to 66.3k. So with the last reports, institutions have increased their longs and decreased their shorts. So they expect gold to get stronger. And in fact, the market has been pushing to the upside quite aggressively. And by the way, if you still haven't, make sure that you go and join my free Telegram channel, which you find here on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, from a daily perspective, at the moment, we have a market which has just broken yet another time above structure. In fact, this zone was acting as previous daily resistance, preceding this rejection to the downside, again acting as resistance here. Now the market is breaking above the zone. And what we know, again, is that previous resistance, once it is broken to the upside, becomes support. So if now the market will go and retest this level, it would be a retest of previous daily resistance. At that point, turns support. And we have a situation in which institutions are already moving to the bullish side for gold. So if we get this break and retest, this would increase the probabilities that inside of this support zone, we could see more institutional longing, which at that point would further increase the probabilities of a potential push higher away from this area. So if we get this correction to this area, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.